we'll try to group questions into themes or subjects for the convenience of the listeners, the viewers. First, it looks like we have done a very good job in terms of explaining our historical results, because there are very few questions about past, but nonetheless there are some. First question I do not quite understand, but maybe you'll be able to get it better. The question is, what is the reason for higher write-offs in 3Q compared to the previous quarter? It may be relating to credit charges, right? Simply.
Yes. So first of all, in the second quarter and in the first quarter, we had a partial support to the cost of risk from the sales of NPLs, which are shown on page 12. So this is one reason. In the third quarter, we had no sales of NPLs. In fact, this is the main reason versus the second quarter, because in the second quarter we had 19 million zlotys that came from the sale of NPLs. The second also, that as it is visible in this page, we had a negative cost of risk in corporate during the second quarter, and so of course we are still growing, so we cannot assume that the cost of risk of corporate will continue to be negative, and so it was very small, very slightly positive, 5 basis points in the third quarter. But basically, these two elements together with the growth of the loan portfolio, because we cannot forget that we are growing the loan portfolio, not contracting the loan portfolio. So this is the growth of the loan portfolio also drives some increase in the amount of the provisions. But as an explanation for the average cost of risk, I think this is the most. These were the drivers.
Okay, a question from Mr. Raul George. The analysts have spotted that we had a drop in disbursements of mortgages in the third quarter. They ask for a reason, they ask for outlook, and also there's a question of probably a potential borrower, because the question is about how long does it take Millennium to issue a credit decision?
So I'm not so sure, but I have the memory that we said in the last quarter meeting. Maybe it was with the press. I don't remember that we were doing a little bit more than we were forecasting, or that we wanted, and so there was a big discussion how to reduce the sales in a product that the customers like, the network like to sell, everybody likes in the bank, and but we also understand that we need to have a quite balanced position, and so we end up making this reduction, forcing a little bit the process. And we have this idea that, of course, it will not be for everything. Of course, there will be always special programs, but to digitalize as much as possible the process. Otherwise, it would not even be possible to disburse 50% more than the first 3 quarters of last year. And continued with efficiency, reducing people, especially mortgage, that in the past, in the previous process, was a very paper and human-intensive process. So we did this. We like these kind of volumes that we are having. Maybe we could go again to this 2.5, but we are not obsessed, and we would like to have this kind of production for a long period and not have excess of production during some time, even because although it's low consumption of capital, there is some consumption of capital. We have been doing a big effort in terms of risk-weighted assets of corporate side, reducing exposures that do not have side business, less interesting margins, and of course mortgage is a low consumption of capital, but we know that we need to preserve capital during this period, so we prefer to have this for a short period of time or for a long period of time, these levels of production, so between 800 million disbursement per month. It should be the level that we can do. We can do a little bit more, but not much more. That's our target. If I remember well, we are working at the moment with 4 days time to yes, and so if the application is done in the proper way, we should be able to have 4 days time to yes. This excessive fast time to yes is creating some issues, because then the customers are asking to go a little bit lower or slower to have time to prepare all the process from their side. But we are very happy with this redesign of the process that we did. And we believe that these also give inspiration for some re-engineering in other process and continue it with the efficiency that we started 1 year ago.
Thank you very much. So, as you have heard, you're more than welcome to come to Bank Millennium and apply for a loan, and you will be processed, so to speak.
If
quickly.
not, you can email me claiming.
We don't want to be too quick because it's causing a lot of discomfort to our clients, apparently. Okay, so sticking to results per se related questions, there was a question about the reason behind the drop in credit fees in 3Q. Was it related to lower origination of mortgages that we just touched upon? And what we think is the outlook for fees in general for the rest of the year and for 2020?
So we are showing on page 10 of the presentation the breakdown of the fees. So, in fact, it came from two sides, from 3, in fact. So we had a little bit lower loan fees, slightly also a little bit lower insurance fees. Sorry, because we had some settlements, annual settlements in the second quarter. Sorry, and but in general, as you know, not all the fees and commission income are completely regular through time. So we need to take this into consideration. And in the second quarter, we had some, let's say, settlements, especially in insurance, that were beneficial for the drive. But I think but knowing that this is not a regular item in every single quarter, that's why I highlighted that versus the same quarter of last year, we had a growth of 12%. So I think what is also important is to take into consideration, knowing that there is sometimes some seasonality of some of the fees, that still on a quarterly basis, year on year, we still have a solid growth of 12%.
Thank you. So sticking to Q-on-Q volatility of movements, there was also a question about the costs, whether there were any one-off admin costs in third quarter because they increased on a quarter-on-quarter basis. And following up on this, what's the outlook for the remainder of the year in 2022, especially in light of the HR cost inflation?
I will answer the first part. So in the second quarter, we also had some extraordinary settlements of costs that reduced, in fact, the cost base of the second quarter, and which did not occur in the third quarter. So that's why there is this comparison. I mean, this growth versus the previous quarter. Although, if we compare with the third quarter of last year, the costs are still clearly lower than the third quarter of last year.
In terms of HR costs, we are managing as we can. There is clearly a huge salary pressure in Poland. There was this salary pressure already before COVID pandemic. With pandemic situation, there was some, I would say, during last year, some slowdown, but this year is speeding up again. And this means that somehow we are offsetting the headcount reductions that we are having and the benefits of this headcount reduction with some salary raises. Also, there is something that we also need to keep in mind is that the business model is changing, and also the structure and the type of employee that the bank has is also changing. So there is an increase in a constant basis of IT, data science, customer experience professionals, that they are at high demand and at a high cost for the bank, and so this is something that it's a reality that is for staying, and the bank will manage in a way that will retain its best people and will offset, if not all the personal costs pressure, at least partially, by continuous improving in the process and having, as time goes by, less and less headcount.
Thank you. And to finish off with results-related questions, there was a question about net losses eroding capital, and also about and our view on the current capital position and excess of capital. And within that context, there was also questions about bond yields, which are rising, and whether we expect them to have a negative impact on our 4Q capital and capital ratios.
So regarding capital, so of course, when we are having quarterly losses, this is, of course, having an effect on own funds, which is also partially offset by the careful management of risk-weighted assets, which we have been doing, and especially in the corporate area. So, but still, as we have shown, we have a significant excess of capital ratios over the minimum requirements. So this is clear. And second, we also believe that all the effort that we are doing now in terms of provisioning and in terms of mitigation the legal risk also will contribute sooner or later to the gradual reduction or even elimination of the additional capital charge that we have, which is still relatively high. We have a Pillar 2 buffer of 3.4 percentage points. And we believe that through time, with the dilution and reduction of the FX mortgage portfolio and mitigation of the legal risks, we can continue this process of reduction of this Pillar 2 buffer and ultimately to expect its elimination, which will release further capital for the bank. So this is what I can say regarding the capital. The other question was about bond yields. So this correction on the market already had impact on the third quarter, as it is shown in our financial report in terms of other comprehensive income. So I think this is clearly stated there. There was a further correction in October, which will further imply a correction in the valuation of the bond portfolio. We were not very aggressive in terms of the bond portfolio, so because basically our bond portfolio was essentially concentrated in maturities up to 4 years. So, of course, there is always a negative mark-to-market because all the yield curve moved up, but still we believe that within, I mean, the overall size of the bank, this is relatively diluted. So I think we will not have a major impact coming from that.
Thank you very much. Sounds like the interest rate hikes have sparkled attention, and this is becoming a hot topic again. We had various questions relating to this subject. In general, the questions about our sensitivity to interest rate hike, whether we repeat our sensitivity from the first half report, what is the outlook on NII as a result, whether we expect growth in revenues in the fourth quarter as a result of the first 40 basis point hike. It's all around this subject.
So I will start answering the question. So first of all, as I mentioned during the presentation, even without the recent interest rate increase, we were already in a clear trend of finishing the year with net interest income for the full year 2021 above the full year 2020. And this was going to be achieved clearly. If you remember, in the end of the first quarter, we were 11% down year on year. In the end of the second quarter, 4% down year on year. In the end of the third quarter, 1% down. So we were already clearly in a trend of reaching the full year 21 above full year 20. Of course, the recent increase further makes us comfortable regarding the achievement of that result. In terms of sensitivity, we stated the sensitivity both in our first half report and once again now. So we stated that an increase of 100% of 100 basis points of the yield curve would translate into a growth of NII of 11% in the next 12 months versus the previous 12 months. So this is the sensitivity that we have disclosed. This is a static calculation, obviously. So in practice, of course, it can be better or worse depending on concrete actions that are taken in terms of repricing of products, repricing both on the lending and on the deposit side. But the sensitivity, as I mentioned, is 11% positive to 100 basis points parallel shift in the yield curve.
In our view, and I think we said this already in the past conferences, the last interest rate cut of 40 basis points on summer 2020 was already outdated. So it was, if you remember well, in that time NBP had a forecast of a drop of GDP of 5.4, but the banks that they were using high frequency data, they were already forecasting just 3, as it was, for example, our case. And so it was a little bit excessive. And we are offsetting this because also it was visible that the inflation, even before the energy crisis, it was clear that the inflation was not just a supply issue, was coming back the pressure in salaries that we saw in 2018 and 19. And so this first 40 base is an adjustment. We are not foreseeing a lot of corrections to be done. Of course, maybe we will see some in corporate deposits, some adjustments, some fees that were charged when the interest rates were really close to zero. can disappear on long run. Of course, there will be an interesting part in terms of new production of cash loans and old production that will readjust meanwhile. This is obvious, but this is a first impact. Then, as we will have other hikes of interest rates in the future, then we will see some adjustments, and we cannot also believe that the banks will appropriate all of the benefits of the hikes of the interest rates. There will be always some part that will be also offset by increase of cost of deposits or savings later on. Also, if there will be much higher interests in terms of consumer loans, maybe there will be some offset in terms of commission. So it needs to be seen as, I think the first one is it's just a readjustment without the needs of the banks to compensate a lot this initial part of 40 basis points. But if we have another 50 and another 50, there will be also some offsets that we need to start to have this in mind as well. So it will not just be a benefit in loans and zero cost in deposits. There will be somehow some, of course, there will be benefits for the bank, but it will not be at 100% of the interest rate hike.
Thank you. IR is not typically involved in sales of banking products, but apparently we have a person here on the call who is also interested in taking a consumer loan. The question is, what is the typical interest rate on consumer loan? And will it go up with rate hikes, and by how much?
We believe that consumer loans are attached, or let's say it in a different way, the system of the maximum interest rate in Poland is very conservative, and so the majority of our production is it's at the maximum of interest rate. Let's call it like that. And it's just lower when we make specific actions that we do for customers that are what we call it new to the product, so to improve penetration of the product in our database, shorter maturities, shorter also or smaller amounts, that also we do to improve the cross-selling of our database. So it's the maximum, and as the maximum will go up, we will also go up in that perspective. Of course, it may be a specific customer with a specific transaction. I don't know what we are doing at the moment, but in our view, this is the right pricing. So we will move with the and I think this is the important part of the question, is that if we will go up with the maximum interest rates as the interest rate go up with the increase of the reference rate, and yes, in I would say almost all the production, or at least the vast majority of the production, will go at the same pace as the interest rates will go up and the maximum interest rate will go up.
Okay, thank you very much. So we're through with, let's say, technical questions, and we can congratulate ourselves, Fernando, on disclosure of legal risk, because there was no question about legal risk provisions this time. However, we've probably done less well on the settlement front, or maybe it's a novelty, because we have many questions about settlements. And again, there are many permutations, but they all circle around one question. First of all, why is there a difference between the cost of settlements between third quarter and second quarter, given that the difference in the number of conversions and full repayments was so low? People ask about specific terms, and there's also a few questions about the tax treatment, between the difference between FX legal risk provisions and the cost of settlement with customers.
So I will try to just to summarize the main points of all these questions. So first of all, as we are showing on pages 13 and 14, in fact, we are trying to provide as much as possible disclosure regarding the evolution of the provisions on one side, the evolution of the number of court cases on another, and the evolution of the amicable agreements with clients, which cover conversions to Polish zloty and early repayments of loans. Here in these pages we have shown the number of conversions to Polish zloty and full early repayments. On the top of that we still have some additional partial early repayments that are also negotiated. The second thing is that this is a process that already started quite some time ago. Of course, now it has achieved a lot of visibility due to the number of agreements that were signed. But this is a process that was already started many quarters ago. Even I remember that we have stated through time in the quarterly reports that we had a constructive approach in order to find solutions with the customers. And of course, this constructive approach was to try to have solutions that could be agreed between us and each individual customer. The conditions for each customer are different and depend, and the outcome for us and the loss for us depends on the specific characteristics of the loan. So it depends on when the customer took the loan, at which FX rate took the loan, how long was the loan, for how long was the loan, what was the average amount of the loan, what was the current outstanding, and so on and so on. So there are a number of factors that impact, and so that's why we don't want to enter into averages, because each customer is a customer, each loan has a different situation, and that's why one of the differences between the second quarter and the third quarter is that although the number of the negotiations was not much higher than the second quarter, although still it was 300 more, comparing between the second quarter and third quarter, the profile of the loans that were negotiated in the third quarter probably involved bigger amount loans, and also some of these characteristics turned out to imply bigger losses for us than the ones that were settled in the second quarter. So this is what we can say about so it's not so much about are we giving more now versus what we are giving before. This is not exactly the issue. The issue is that things are evolving. Also, the FX rate, unfortunately, has been going against us. So each time that the FX rate is worse, I mean that the Swiss franc is stronger, also our loss is increasing. So there are a number of factors that, but the nature of each loan that is settled has a lot of importance for the final outcome. So this process is still going on. So we are continuing the effort in the fourth quarter. We will continue to show negotiations. So we also had this question today in the morning regarding expectations from the journalists, expectations about further settlements. This is something that it is ongoing, and so as long as there will be interest from the customer side, we are always interested. So, and we are always available for the negotiation. And so this is completely we are not setting a time limit for this. We are always open for the negotiations, and so we expect that at least during the fourth quarter we will have still a good pace of the negotiations. The third quarter was exceptional, in fact, but we still expect a good number of agreements to be signed in the fourth quarter. Regarding the tax treatment. So tax treatment, so the provisions that we have been doing And due to the fact that most of the recent trends of court decisions are more towards invalidity of the loan agreements, so in general, in the third quarter, basically the provisions that were done did not have any. We did not consider, for the time being, any tax effect. So the gross impact was almost equal to the net impact. This does not mean that it will be like this, but in a conservative way, this is how we have treated this. The settlements were booked as an FX loss, and so this part, yes, we considered. Regarding, I think there was something.
Within this context, there was also quite a number of questions about the value or volume of settled mortgages, which we did not provide, and honestly, we do not intend to provide it because this will be a free lunch.
Yes.
You can divide one by the other, and this will lead you to wrong conclusions.
Yes, so that we don't want to provide that average because, exactly as I mentioned, these are individual negotiations. This is not a general offer. These are individual negotiations which are based on the concrete conditions of each borrower.
There were also a few technical questions, but I'd rather take them offline about our market share and a couple of other nuances, which I don't think require the whole audience to listen to within the context of your time, which is obviously very precious. There was a few questions about. There was one question about. I wrongly stated there were no questions about legal risk provision. There was one, and it was how much of this was allocated, and you can find the answer in the FX risk section. But for your benefit, out of 2.4 billion. At Bank Millennium, 2.1 was allocated, but all the details are there, so just find it in the report.
There is also a question about court verdicts and first instance versus second instance verdicts. So in the section of our quarterly report where we describe the legal status and the evolution of the court cases, so it is stated that I think we have 90-something% of the loans still before, 94 or 96% of the loans still before first instance verdict. So we have an extremely small number of first instance verdicts and even smaller of second instance verdicts. So the first instance verdicts in the recent times have been very negative because, unfortunately, the court started to automatically issuing decisions without taking care about the proper circumstances and analysis of the merits of the case. So in the second instance, the picture is more blurred, so there is a less visible distinction, although still the trend is negative. But I should remind that there are still important issues which are not clear and which can significantly affect the final outcome of the cases as well as the amount of the losses. Namely, it's still not clear and the right of the banks to be entitled to compensation for the usage of capital. This is one of the pending questions in the Supreme Court and also in the European Court of Justice. If this question will be finally clarified, as we hope, that the banks are entitled to this compensation, of course, this would change the picture in terms of the provisions that are being done, and we think also that would contribute to a much more constructive approach from the banks and from the borrowers in order to reach amicable settlements.
Sticking to the FX mortgage risk, there was a question about our estimate of the maximum loss on the portfolio. It was actually relating to our year-end 20 number, which was 2.4. But obviously, we continue to provide fresh numbers. And also, again, I would direct you to the FX risk section, because this time we provided a lot of data.
And the number is there.
3.5 billion is the new number, but there are also other scenarios provided, so you can see the differences between each of them. And lastly, there are a few questions regarding the outlook about cost of risk, fee, cost, lending volumes next year. But I wonder if we actually want to answer them now, because not far away from here, in terms of time, we will meet again. Because most likely in early December, we will be presenting to the market our midterm strategy, and maybe this will be a better opportunity to discuss about 2022 and midterm outlook, unless you gentlemen want very much to share your thoughts on 2020 now.
We are working on that, and so it's exactly this. In the beginning of December, it will be adequate time also. We are quite optimistic for the Polish economy and for the capacity of the bank to take opportunity on these on these developments, and we keep our target of having in 2021 and 2022 the majority, not totally, but the majority of the burn of this legacy risk. And just a flavor, because I know that it's complex for understanding that how this process is done and everything. So we have more than 100 negotiators, and these negotiators, they go through the process always the same person to the customer. So because it's a journey that is also complex to a person. We are converting a credit, we are unwinding a position, we are also explaining, and a lot of information was done, a lot of expectations were done, a lot of press is done, a lot of sometimes conversation with lawyers were done, and we have any settlement that we are talking about. It's between 4 to 5 conversations with the customer. So it's a process that takes a long time, and it's complex for both sides, and so each case is really a case. So it's not an offer that we launch through internet and it's everybody take it or not. Even so, we recognize a lot of the merits of the possibility of a solution like that, and in due time we will take this decision. But now it's more we are reacting to what is the expectation of a customer. And sometimes these expectations connected with installments, sometimes there is the expectation of selling the asset and then just repay and move forward. Sometimes is looking for conversion and elimination of the risk, or sometimes also some psychological sharing of the burn of this non-expected depreciation of zloty. So it's a mix, and so it's a process. We took a long time to achieve this, as Fernando said, and we started a long time ago. And last year in 2020 we made 1,500 or something more settlements. So it was a process that during 2020 also we started. And there is waves. Sometimes there is a big interest from customers, sometimes a little bit less, and it's not what we are forecasting. For example, we are forecasting less activity at year end. Maybe it's going to be exactly the opposite, and there is a lot of people that wants to solve their issue before the year end, so we don't know. We believe that each case that is solved is good for the bank in terms of reducing the risks of this legacy portfolio, but is also good for the customers and solving this situation that is not comfortable to anybody.
I'll try to earn my sales bonus again, so do come to Bank Millennium, either for conversion, settlements, new product, whatever, do come and talk to us. Fernando, do you have any questions that are interesting for you to answer? I mean, I have to say that Fernando is very diligent. He goes through the list, in small steps, and he doesn't like to omit any question, which is a bit scary for an IR person, but life is as it is. Any question that you would like?
Okay. I think we covered most of them, but some technical issues will still be subject to further clarification.
Okay, so thank you very much to all the viewers for your presence, your time, and your interest, and obviously all your questions. If we omitted any of your questions, I do apologize for that. It was not intentional, and if you feel that any of your questions have not been answered, please do contact IR department. We will be happy to help and answer. Gentlemen, thank you very much for your time. And the viewers, you will hear from us shortly. As we said, before the end of the year, we will likely come back and we'll share our thoughts about near-term plans and prospects. So it's not the time for the New Year greetings yet, or Christmas greetings. So you'll hear from us again. By the time, keep safe, stay healthy, and good luck. Thank you very much.